Welcome back, everyone. Today we're going to be talking about Apple stock. We're going to review their financials, look at their growth, and run a DCF model on the company and get an idea of what a fair value buy would be. But first, before we get into that, make sure you give the video a thumbs up and sub to the channel if you're not already. It really does help the channel out. And with that, let's get right into Apple's growth. So you can see that Apple from 2017 to 2021 grew from $229 billion to about $365.8 billion in revenue. That is incredible growth. You can also see a net income growth. It grew from $48 billion to $94 billion. Free cash flow grew $51.7 billion to $92.9 billion. Next, we go ahead and take a look at Apple's debt. We look at the average of their last 5 years of free cash flow. That's about $68 billion. And then we multiply it by 3 and get $204 billion. We want to see that the long-term liabilities come under this amount because that means that 3 years of their average free cash flow is able to pay off that long-term debt in that amount of time. It is indeed under that amount at $161.6 billion. Then we look at the current ratio. That's current assets divided by current liabilities. All that basically means is that if the company liquidated today, could those current assets cover their current liabilities? Any figure over 1, again, means that they can, but I typically like to see the figure closer to 2. This one caught me off guard. It's very close to 1. I guess Apple must have a lot more current liabilities than I thought they would, but nonetheless, it is still over 1. I just typically like to see it closer to 2. Now, last but certainly not least, we will come to the DCF model. We need to find a revenue growth rate that makes sense for the company. If you look at the compound annual growth rate for Apple over the last 5 years, it's about 9.8%. However, we have to consider that that's kind of being perked up because the last year of their revenue growth was 33% in the year 2021. So if you exclude that year, your CAGR, or compound annual growth rate, is going to be much, much lower. The average analysts are expecting 7% growth on average over the next 2 years. We're going to go ahead and go with 6% growth just to try to remain a little conservative. So we go to the model, grow that revenue out by 6% to 2026, and get about $489.5 billion in revenue. Now we need a free cash flow margin to apply to those projected revenues. We get the free cash flow margin by dividing free cash flow by revenue. If you do that over the last 5 years, your average free cash flow margin is about 24.26%. To remain at least a little conservative, I went with 23% for the margin. We apply that to all projected revenues. Then we have to find a terminal value. We do this by applying a weighted average cost of capital of 6.8%. I got this figure from finbox.com. I also apply a perpetual growth rate of 2.5%. I discount all these figures back with my rate of return of 12%. You add all the values up, divide by shares outstanding, and we get an intrinsic value of $115.25, or roughly $115 per share. Okay, so according to the DCF model, this is definitely not a buy. A lot of people like to put a premium on Apple, but the fact of the matter is I was not very conservative with this model. And even if you were to go way above what the analysts are thinking and let's say apply 10% revenue growth rate over the next 5 years, which is more than their last 5 years, this would likely still not be at fair value. For reference, at the time of recording, Apple is around $150 a share. This DCF model I ran gives a fair value of about $115 a share. Without getting into a big debate about, oh, well, Apple needs a premium and does this DCF model can't be right. To me, Apple is a separation of stock from company. I love the product. I own a MacBook Pro, the new 14-inch one. It's amazing. It is the best laptop I have ever owned, hands down. I will never buy any other kind of laptop except for Apple. Apple is very ingrained in everyone's lives. They cash flow like a king. And yet the DCF model says that they are overvalued. If it hit right at fair value that I got, $115, I would buy Apple all day. But at current price, I think Apple is very overvalued. And according to the model we ran, it is overvalued. Okay, so that's gonna wrap this one up. Let me know your thoughts down below. Again, I let the numbers do the talking, and that's what I always go by with investing. If you have Apple valued differently, I'd love to hear your thoughts down below on it. I always like to learn more, and if there's something that I'm missing with Apple, please let me know. And I do mean something that I'm missing with Apple stock, not with the company. Apple as a company is amazing, but let me know if there's something I am missing with the stock and the numbers. Okay, well with that, we're gonna wrap this one up. I hope everyone enjoyed watching, and everyone have a great day.